traders? Welcome to the first exciting episode of Trade Tales. I hope you're all ready to dive into the world of trading because today we are going to analyze everyone's favorite shiny metal, gold. Needless to say, we are going to have some fun with this one. Let's keep going. Gold has been playing hard to get lately. It's been like the one friend who can't make up your mind, hovering between 1940 and 1980 since May 19. It's like it's on a never-ending roller coaster ride, and we're just here clutching our seats and waiting for the drop. It's been a wild ride so far on gold, folks, and the plot thickens. Since June 7th, gold has been dancing around between 1970 and 1940, playing hide and seek with traders. And just when we thought it might break free, it fails on June 15. I sincerely hope none of you got trapped by the fake out. I call this gold's disappearing act. And let me tell you, miner, this metal knows how to keep us on our toes. But you know what? We love a challenge, and this is the perfect opportunity. Before I move forward, kindly hit subscribe, and as always, show your love by liking this video. Now, let's talk about the Federal Reserve, the mighty force behind all things rates and inflation. They have been raising rates for the last 10 times in a row, but hold your forces because they recently decided to take a breather and keep their federal funds rate unchanged. Looks like they are concerned about lenders tightening credit for US consumers and businesses. We can't have that, can we? Slow and steady wins the race, my friends. The Fed might be pausing for now, but they are eyeing those rates for future hikes. They are like, just you wait, inflation. We're coming for you. Speaking of inflation, it's not exactly chilling out just yet. Powell says the core CPI is still far above their target. So the Fed might continue raising rates in the coming months, giving us some kind of suspense. They meet again on July 25th and 26th. So mark your calendars. Alright, enough chit chat. Let's get down to business. What's my trading plan for the coming week? Well, I'm expecting gold to break free and soar like the majestic eagle. But it's got some hurdles to cross first. First, we need it to break above the stubborn 1970 resistance level. Come on, gold. You can do it. Now, once it breaks the resistance, ideally, it needs to retest it and turn it into a kind of support. The plot thickens, because that's when I'll be on the lookout for some sweet buy opportunities, aiming for the skies and well above that 1980 level. To the moon. Buckle up, because this rocket is about to take off. But before we wrap things up, remember, trading is no joke. It's a risky business, and consistency is the name of the game. So let me share some wisdom from my favorite book called Trading in the Zone by Mark Douglas. Number 1, I am a consistent winner because, first, I objectively identify my edges. Number 2, I predefine the risk of every trade. This means accurately managing a trade, knowing how much you're going to lose, depending on the amount. If you're trading on a prop firm, be sure to check out your allowed losses for the day and also comprehensively for the entire equity amount. Number 3, I completely accept the risk, or I am willing to let go of the trade. Number 4, I act on my edges without reservation or hesitation. 5, I pay myself as the market makes money available to me. Number 6, I continually monitor my successibility for making errors. I accept that I can make errors and I manage the same. Number 7, I understand the absolute necessity of these principles of consistent success and therefore I never violate them. Wise words, my friends, wise words. And don't forget to subscribe to my channel and join me for the live streams from Monday to Friday. We'll navigate the trading seas together, share some laughs, and make some sweet profits. Until then, stay shiny and keep those charts glittering. Thank you for tuning in. This has been the first episode of Trade Tales. I am your host signing off. Happy trading. Peaceful week, everyone.